Do you want to know the exact strategy I used to catch a whooping 170 pips on gold? Then you are in luck, because today I'm going to be breaking it all down from the chart analysis to the trade execution, and I'm going to be sharing every single detail of it. For those who don't know me yet, I'm Adman, a YouTuber and a sleeping giant in the trading world. So if you are ready to learn how to catch moves like this, then keep watching. Alright, let's dive in. Alright guys, so this was the trade I caught earlier today, and I'm going to be sharing with you the details all from the top-down analysis I did and how I was able to catch this exact trade. So I want you to really pay attention, because I'm going to be sharing some tips also that is going to really help you in the long run while using this kind of strategy on gold. So the first thing I do is that I go all the way to the weekly time frame to check to have a direction. So I'll get into the weekly time frame. As you can see in the weekly time frame right here, price gave us what we call a pullback. We had a retracement all the way back to this weekly fair value gap. So all this move to the downside was just to come back to fill this fair value gap. Fair value gap also kind of act like support and resistance, if you want to look at it that way. So after price filled this fair value gap, and since it's just a retracement, that means, and if you are looking at it from a perspective of market structure, market should at least come back to the high. As you can see, I mark out the high, so which is my goal. So this is just for directional buyers. So from here, I'm expecting our price should get to this weekly high, if at all break, but we don't predict we react, right? So after knowing my direction, I came to the daily time frame to spot entry confirmations or zone confirmation. That's how I love to call it. And according to market structure, if the weekly is going to buy, you should start having some kind of internal structures in the daily also. So as you can see, we have something like this in the daily. Price came to this to react, and now price came to make a high. So this should be a higher low, and we should be expecting probably a higher high to these highs that was made right here for the daily and the weekly, right? So after noting that, I spotted this daily zone right here, as you can see, and this was not just the only thing I spotted, right? Let me first remove this guy. I took out my Fibonacci retracement, so I don't really use it just on the higher time frame like this, as you can see. So I just put it to this high, and as you can see, you wait for price to come back to the 0.5 mark, to that 0.5 mark, right? So as you can see, price got to the 0.5 mark, which is also the daily zone I marked out. So these are now two confluences that price should actually start moving up, because the retracement of the daily has finished. So after getting my confirmation zone in the daily time frame, so I came to the 1 hour time frame to spot an entry. So I'm coming to the 1 hour time frame. As you can see, we had a change of structure, or some people might call it double bottom right here. And as you can see, we had a break of trend line. This trend line broke to the upside right here. This 1 hour trend line. And what I wait for as my entry is something like this. What I wait for is a consolidation like this, and then expecting a breakout to the upside, right? So this is what I use for my entry confirmation. So I went all the way to the 5-minute time frame. So I'm getting to the 5-minute time frame, I spotted a very nice A-grade consolidation. So I'm spotting the A-grade consolidation. I marked out the highest point of the consolidation, which, as you can see right here, price consolidated for a while and eventually give us a break right here. And after the break, what I just do is to set my stop loss just right below, and sometimes I give it more room depending on what I'm seeing. You knowing the bias of the market, I just came to the 4-hour time frame to spot some resistance zones. So I came to this 4-hour time frame to spot out this resistance zone right here, and as you can see, price has just smashed there, but I did not exit here. Where I exited at, I exited just right here at this zone right here, guys. This was where I exited, about 100 pips after my entry. So let's just take it from right here all the way to this point right here. 100 pips, about 112 pips right there. And one of the reasons I exited was that I do say this a lot, that I do have what we call aggressive pullbacks, right? So So we have what we call aggressive pullbacks, and after price has given me what I just wanted, I'm just like, okay, I don't want to have any kind of retest, unnecessary retest. Let me just take my profit since I'm okay with what I'm seeing. And as you can see, price give us the aggressive pullback before going up again. But sometimes price might just keep on consolidating, and I just don't want to spend too much time on this particular trade, because if you also use the Fibonacci retracement tool and start from this place and put it to the highest points right there, you see that price just came back to the 0.5 mark again and then started going back up. So that's that for that. I hope you enjoyed this video. If you enjoyed this video and learned one or two things, kindly share to those who might also be in need of this particular video, and also make sure that sticking to one strategy is the holy grail. Pick one strategy, probably one or two from these that you can use to join your own strategy going forward, because at the end of the day, every strategy is going to experience losses, drawdowns and wins. So it's just a probabilistic game, and I want you to play the probabilistic game. It's all a numbers game. And I'm going to be catching you guys in the next video. I want you to like and smash that subscribe button, and also most importantly, turn on post notification, because I'm going to be giving you this type of video going forward into the future. Peace out, guys.